Let's take it now to the President's Treasury Secretary, Stephen Mnuchin, joining us this morning. Mr. Secretary, thank you for joining us this morning. We just heard the President right there. Also, you and your colleagues have said the wealthy will not get a tax cut under the plan. But it's really hard to see how that can possibly be true, given the fact that your plan proposes cutting the top rate, eliminating the estate tax, eliminating the alternative minimum tax, cutting that rate on pass-through entities. And the Nonpartisan Tax Policy Center calculates that 80% of the benefits will flow to the top 1%. We're going to show that chart right now. Almost every group getting a tax cut, but the wealthiest getting the most. That's just a fact, isn't it?
George, first of all, it's great to be with you this morning. And no, that's not a fact. As we release the details of the plan, we'll show all the different impacts to different people. And as the President has said all along, the changes to the income tax system are meant to create middle-income tax cuts and also make corporate and business tax competitive so we can bring back tons and tons of jobs and capital to this country.
I know that's the objective, but based on the evidence you've put out so far, all those cuts I just talked about, that will benefit the wealthiest the most.
Well, George, I just don't think that's the case. As we've talked about, changes in the top bracket are offset with elimination of almost every single type of deduction other than charitable giving and the mortgage interest deduction. And, you know, this has impacted different people in different states. But again, we'll go through all the details as we go through the congressional process of the House and the Senate, and we'll show all the distributions. And as relates to pass-throughs, this is about creating jobs. A huge component of the businesses in this country are pass-throughs, and we want to make sure they have the necessary tax relief to go out and hire more workers and invest more capital.
Yeah, Secretary, I just don't understand how you can say, based on everything you've put out so far, that it's not a tax cut for the wealthy. Even the Vice President has said these are across-the-board tax cuts. The wealthy pay most of the taxes. They are getting tax cuts there. They are going to get benefits.
Well, George, in the high-tax states, the impact is about 5 or 6%. So if we cut the rate down to 35%, that's actually an increase for the wealthy in the high-tax states. And as we've said, we're considering what we do if there is a need for a fourth bracket to create more relief. So this will all continue to go through the congressional process.
But eliminating the estate tax will only go to the wealthiest Americans. Those have estates greater than $11 million.
Well, you are correct in that sense. And again, we've been talking about the income tax system. As it relates to estate tax, you know, the death tax, we believe that people get taxed once and not twice, and that will enable to keep lots of family businesses passed along. But the estate tax, you are correct. The majority of the estate tax is paid by the wealthy. So we're focused on changes to the income tax system.
But you've proposed eliminating the estate tax. On those changes to the income tax system, if I understand you correctly, you say the objective is that the wealthiest will not get a benefit. So are you saying that the President is going to veto a final bill if it provides a tax cut to the wealthiest Americans?
The President very much wants to get tax reform done because it's critical to the growth in the economy, and that's something we've been talking about since the campaign. We fundamentally believe we can get back to sustained 3% GDP or higher, which adds literally millions and millions of jobs and over $10 trillion to GDP, and that's our focus. So the President wants to get tax reform. We're working with the House and the Senate, and we hope to get something on his desk to sign in December.
Right, but he's also said, and you just repeated, that he doesn't want the wealthiest Americans to get a benefit from this tax reform plan. So if Congress sends him a bill that provides benefits to the wealthiest Americans, will the President veto it?
George, I think the President will look at the bill when it comes in its entirety. Again, as we've been consistent, the President's objective, and I think Congress has heard that, is to create middle-income tax cuts and not tax cuts to the wealthy. And as I just mentioned, the existing plan actually has tax rates going up in many, many states. So we're sensitive to the impact of the economy. We want to get the federal government out of the business of subsidizing the states. We think that's the right thing to do. And it will have impact on different states. So we'll continue to look through this as we go through the process.
There could be that impact, but based on the evidence you all put out so far, independent analysts have said that the benefits are going to go to the wealthiest. I want to go to the benefits for President Trump personally, because he himself has said that he's not going to benefit from this tax plan. Again, that's hard to see how that's true, given the estate tax, the elimination of the AMT, which has benefited the President in the past, the cut in the top rate, but also we talked about these pass-through entities. And based on the president's financial disclosure form just from this year, we want to put it up right now, he had about more than $500 million in taxable income from those pass-through entities, taxed at 39.6%. You cut that to 25, that's a savings of $75.7 million based on the president's financial disclosure form last year.
George, as we said all along, as we change the pass-through rate, it's very, very important that we have guardrails around those rules. So exactly as you said, this isn't about creating a tax cut for the rich. So we spent a lot of time with the staff at the House and Senate. We're continuing to work on those rules, but we're going to make sure that that's not a way that the rich can use to pay lower taxes than they should, whether it's the president or anyone else.
Well, based on last year's form, he would have gotten that benefit. So how are Americans going to know whether or not the president gets this benefit if he doesn't release his tax returns?
George, that's just not fair because, again, we haven't published the rules as to what's going to apply to the pass-through rate, so you're making certain assumptions that I don't think are correct.
I wouldn't need to make the assumptions if we had the president's tax returns, and I guess that's the question. The president himself has said publicly he's not going to get a benefit from this tax plan. My question to you is, how are the American people going to know that if he's not releasing his tax returns?
Again, George, I think the American public will be comfortable with the information they have. As you've pointed out, the pass-through rate is something we need to be careful about, as you've just described, and we're going to make sure that there's the proper rules. There's going to be full transparency as we go through the legislative process, what those rules are, so that rich people can't take advantage of it.
You talked about transparency. In the interest of transparency, can you guarantee that the president won't get a tax cut under his plan, and how will you demonstrate it?
Again, as I've said all along, the objective of the president is that rich people don't get tax cuts. And we're perfectly comfortable as we go through this process. We'll explain to the American public how that works, and we'll give plenty of examples.
Will you give the information about the president himself so he can back up the claims that he's made that he's not going to get a tax cut under this plan?
George, I can't comment on what the president will do or what he won't do on that. But again, I'm perfectly comfortable that the American public is going to understand this as we go through this process. Because what this is about is creating middle-income tax cuts and creating a corporate tax system that's competitive. We have one of the highest tax rates in the world. We have a concept of deferral. Our companies leave trillions of dollars offshore. Those are jobs. That's money we want to bring back. We're going to create expensing that incentivizes company to spend capital here and create jobs. And the American public understands this is about jobs. This is a jobs bill.
Well, I don't understand how you can provide that assurance to the American public about the president and the wealthy if you don't release his tax returns. But you also talk about the goal being a cut in middle-class taxes. And under the plan, from what we can tell so far, most middle-class families will get a tax cut. But there also appears to be many middle-class families who will get a tax increase. The Tax Policy Center said that by 2027, taxes would rise for roughly 1/4 of taxpayers, including nearly 30% of those with incomes between $50,000 and $150,000, and 60% of those making between $150,000 and $300,000. The top tax official here in New York City has said that about 3 million people in New York will see their taxes go up because of the elimination of the state and local tax deduction. Nearly half of the middle-class residents in New York earning between $50,000 and $75,000 a year. So some middle-class Americans, including many here in New York, will get a tax increase.
Well, I don't know how the Tax Policy Center can publish those figures since they don't have all the details, including the brackets. People like the Tax Foundation and others have waited, which I think is responsible when we release all the information.
But that's on you, isn't it, if you haven't released the details?
No, we're working with the House and Senate. It's going through committees, and those details are going to be released. And we've said that continuously. And as it relates to New York, I'm sympathetic to the issues in New York. As you know, I've paid taxes in New York and California, which are two of the highest tax states. And, you know, if we eliminate the subsidies to New York and California, that creates certain issues. But I don't think it's fair that a bunch of other states are subsidizing New York and California. And, you know, that's going to be an issue for me as well as I pay taxes there.
So if taxes go up on middle-class New Yorkers, so be it, middle-class Californians?
No, that's not what I've said. What I've said is we're trying to create certain adjustments so that the middle class in New York and California don't get hit hard by this. But there are issues, as you've said, when we change a system where we eliminate the tax subsidy of certain states, that will impact different people in different states. And we're working through the details of that. That's why, as we haven't released the full plan, we're working with the committees. We want the committees to understand this. And we're very focused on middle-income tax relief.
But you can't guarantee that all middle-class individuals will receive a tax cut, can you? Some will get a tax increase.
No, it is our objective that the entire middle class does get a tax cut, and that's something we're working on the details. As you said, you can't make guarantees because every single person's taxes are different. People take advantage of different things, so we can't make that guarantee, but we can say that's our objective and that's what we're working to, and we want to protect the middle class. We went to Indiana last week. We had a specific family that's getting a $1,000 cut under our plan. We had businesses there that are getting tax cuts so that they can grow jobs. And that's what we're trying to do.
And again, that's what you're trying to do. But again, let me go back to the question similar to the one I asked earlier. Will the president veto a bill if it comes back to him with middle-class tax increases for some Americans?
George, the president isn't setting any criteria up front as to what he's going to veto and what he's not going to veto. What the president is doing is working with Congress. It's been over 30 years since we've had tax reform. We have a broken system. We have to fix it. We have to create jobs. We have to simplify taxes. And we got to make a system that works for all Americans and all American business. This is an American Jobs Act. And the president is going to work with Congress to get these objectives. And as I said, hopefully we'll get something on his desk to sign so we can continue to have the economic growth in this country we need.
One of the other big questions is impact on the deficit. We've already seen Senator Bob Corker say he's not going to vote for any tax cut that increases the deficit. Let's look.
There is no way that Bob Corker is going to vote for a tax reform bill that I think in any way is going to add to the deficit. It's not going to happen. Never. Never going to happen. Never, ever, ever.
Again, based on the details you provided so far, there's about $2 trillion more in tax cuts than closing of loopholes and ending deductions. Can you commit that the bill will not increase the deficit? And if it does, are you concerned you're going to lose the votes of Senator Corker and others?
Well, I've had the opportunity to meet with Senator Corker and others and walk them through the math. And here's the math, George, so you understand it. Our current plan, on a static basis, will increase the deficit by $1.5 trillion. That will be offset by, there's a $500 billion difference between what we call the baseline and policy, which is rolled over. So that $1.5 trillion should be addressed down to $1 trillion. And we believe there'll be $2 trillion of additional growth. So under our plan, we believe this will cut the deficit by $1 trillion, and that's what we're focused on. And that's with a conservative 2.9% GDP over the 10-year period of time.
You say that's conservative. The median forecast from the Fed is 1.8% over time, and 21 out of 26 economists surveyed by Bloomberg say that this will increase the deficit, and your growth projections are too big.
Well, the current GDP estimates by all those people are because they're not taking into account what the administration's doing, whether it's regulatory relief, trade renegotiations, or tax reform. And we've had 3% GDP numbers because you see the economy is anticipating and reacting to President Trump's plan. But you're correct. If we don't pass through on this tax reform, we won't get this growth, and that's why we need it. That's why this is critical to get done.
And if you don't get the growth, will you scale back the spending, scale back the tax cuts?
Again, we're confident we'll get the growth, but if we don't get the growth, that's obviously something that can be changed over time.
Mr. Secretary, thanks for your time this morning.
Mr. Secretary, welcome to Meet the Press.
Thank you. Great to be here.
Before I get to the original topic we were going to discuss, which is the new tax reform plan you guys rolled out, I got to ask you about a couple things. Maybe you can clarify as somebody who serves in the president's cabinet. What did he mean by this idea that Puerto Rico wants everything done for them? What did he mean by that, and why was the president appeared to be so angry in his tweets yesterday morning?
Well, let me first say we very much appreciate the difficulty of what's going on there. The devastation has obviously been very, very difficult. And the president and the entire administration, the entire cabinet, are very much focused on this. I've personally been involved in many aspects of this. I've been working with Secretary Perry on the electrical system. You know, we have put a priority to get the hospitals back up and running. We have electricity now to most of the hospitals. I've worked with the Federal Reserve on cash. You commented on issues with people getting cash in banks. We've literally sent in tens and hundreds of millions of dollars worth of cash, making sure we get banks and ATMs open, and we're focused on food and water and everything else. This is something that is a very big focus of the president and the cabinet. We've been meeting almost daily on this.
Why does the president think Puerto Rico is not doing enough to help themselves?
Well, I think the federal government's role is working with the local government, and the governor's done a terrific job, and we'll continue to work with him. This is something that's a partnership between the federal government getting resources to the state so that it can be distributed there.
Okay, you mentioned the governor, but you're not mentioning the mayor. Why did he attack the mayor? She's in a situation, a pretty desperate situation, and seemed to lack a little bit of empathy for the situation at the time. Why did he do this?
Well, I think, as you know, when the president gets attacked, he attacks back. And I think the mayor's comments were unfair given what the federal government has done. But again, this is really about the focus should be.
How do you know they were unfair? Is that fair to say? Have you been down there?
I haven't been down there.
I mean, is it unfair? I mean, it's you know, I remember going through Hurricane Andrew. When you're in this moment a week or so later and you still don't have power, you know, the president himself tweeted a week after Sandy hit, where it's outrageous that power isn't on. People do get frustrated.
Again, I completely understand people's frustration, and this is a very, very difficult situation. I haven't been there, but I've been almost on daily calls monitoring what's going on with the rest of the cabinet. I think FEMA's done a terrific job, given a very difficult situation, and we're doing everything we can to get resources to the governor so that they can be distributed. But I understand people's frustration on the island, and I can assure you the federal government's doing everything we can.
Does the president, it seemed as if yesterday his tone changed in Puerto Rico. Does the president regret attacking the mayor and the people of Puerto Rico yesterday morning?
I haven't spoken to the president about that, so I can't comment on it, but I don't think he was attacking the people. He understands that the people are going through a very difficult situation.
All right, let me move to the tax plan here. I would say the way this was rolled out, it seems as if you're making promises that if you can keep them all, it would be it would be like Houdini trying to do this. That the deficit's somehow not going to go up, everybody's going to get a tax cut. But yet the wealthy aren't going to benefit. Explain to me the philosophy of this. Is everybody going to get a tax cut, no matter their income level?
Well, first of all, I think your characterization of similar to Houdini is just not fair. I've been working on tax reform with the president since the campaign. He's been very consistent on what his goals are. His goals are to get a middle-income tax cut. His goals are to make business taxes competitive. We have one of the highest tax rates in the world. We tax on worldwide income. We have a concept of deferral. This is really a jobs act. This is about creating jobs. And we've been completely transparent on the numbers and what this does to the deficit.
All right. Is the working class and the poor going to get a tax cut?
Absolutely. The objective is a middle-income tax cut.
The middle class is going to get a tax cut?
Absolutely.
Is the wealthy getting a tax cut?
The president's been very consistent. The objective is not to give a income tax cut to the wealthy.
Income tax cut.
That is true.
Because the estate tax is a tax benefit to the wealthy, correct?
The estate tax, also known as the death tax, we believe that people should pay taxes once and not twice. So I separate the income tax system from the estate tax system. The purpose of getting rid of the estate tax is so that people that have farms and people that have family businesses can continue to pass those on.
So does anybody pay more?
Again, we'll go through the details as we have them. We'll have full transparency. But the president has been very clear, and I've been clear from the beginning. Our objective is not to create tax cuts for the wealthy. Our objective is about creating middle-income tax cuts. But as you know, one of the things we're trying to do is eliminate lots and lots of deductions. One of those deductions is about getting the federal government out of the business of subsidizing the states. So this will have different impacts to people in different states, and we're sensitive to that.
So the goal is, you know, there's a lot of this tax plan, and it came through in the health care plan too. It seems as if at the end of the day, red states benefit, blue states get punished. Is this issue on the state taxes, not being able to write them off anymore, is this a way to just target the wealthy in blue states?
Not at all. That's absolutely not fair and not the case. And what I would say about tax reform is it hasn't been done in 30 years. We're focused on changing the system. The system's broken, and most Americans understand that the system's broken. They're not happy with the difficulty of filling out tax forms. It's gotten harder and harder. And under our plan, 95% of Americans can fill out their taxes on a giant postcard. I mean, think about the beauty of that, in that what the money it saves at the IRS, and the simplicity of it.
I got to read you a quote, though, from Senator Bob Corker, who I'm going to have on later in the show. He said, "They're throwing sugar out on the table. You haven't even begun to deal with the spinach part. Not even a little leaf of spinach was thrown out on the table." I guess you could say the state tax deduction, getting rid of that, is your form of spinach. What else? What else? I mean, is anybody... Are we going to take seriously the fiscal issues of this country with this tax reform plan? Because right now, you look at a lot of folks like Bob Corker, they look at it and say, this thing's going to blow a hole in the deficit.
Well, first of all, I've had the opportunity to speak to Senator Corker in person and lots of others, and I went through the math with him. And the math I went through with him is, on a static basis, our plan will increase the deficit by $1.5 trillion. Having said that, okay, you have to look at the economic impact. There's $500 billion, that's the difference between policy and baseline. That takes it down to $1 trillion, and there's $2 trillion of growth. So with our plan, we actually pay down the deficit by $1 trillion, and we think that's very fiscally responsible.
For what it's worth, there has been no study that has been able to somehow reinforce this idea that tax cuts do translate to economic growth. The one time it did was when we went down from 90% with Kennedy down and got rid of that tax hike. But where is the analysis here? I know you guys scrubbed one from the Treasury Department on one having to do with corporate tax cuts. Where is the analysis that says this is going to lead to economic growth?
As soon as the details are out, this will be scored by lots of different academics. We're happy to put plenty of economists on this show who support our plan, and we'll go through the numbers with you. So this will be fully transparent to the American public, and they understand that. This is about creating $10 trillion of GDP. This is about over $2 trillion of additional revenues to the government. And this is about jobs, millions and millions of jobs. Americans understand we have a broken tax system, and this is about making us competitive and bringing back jobs.
I want to go back. You are willing to have the president sign a tax reform bill that increases the deficit?
Not on a dynamic basis. So just to be clear, we fundamentally believe that there are actions in the tax code that create economic growth. So no, the president is not going to sign something that he believes is going to increase the deficit. But that's different than on a static basis.
And there'll probably be a debate about what those numbers mean. You acknowledge the fact that not everybody's going to agree that this doesn't increase.
There should be a healthy debate on those numbers, and that's why we've had full transparency on what these numbers will be.
Was it appropriate that Tom Price was fired?
Again, I can't comment on he resigned. What I will say is appropriate is I think the American public deserve to know how their money is being spent and that it's being spent carefully.
Do you regret making the requests you made for government aircraft, whether it was to go to Kentucky? I know there's an inspector general on that one, or the request you made, which I know ended up withdrawn at the time. Do you regret doing that?
I don't, and let me tell you why. First of all of our travel went through the same process as previous secretaries of the Treasury. Every single one of my trips was approved by the White House. And the only time I've ever used or would use a private plane for government purposes if either there was a national security issue or we couldn't get somewhere. And that's what this is about.
So the Kentucky use of the plane was a mistake?
No, I never said it was a mistake. It was approved by the White House, and there were reasons why we needed to use that plane that are completely justifiable, and we look forward to the IJ report.
Okay. Secretary Mnuchin, I appreciate you coming on.
Thank you.
Thanks for sharing your views.